Mr. Mark Selby. How are we doing, sir?
Mr. Matthew Gordon.
I am glad to see you one last time before Christmas, and we get stuck into wine, mince pies. Actually, I don't like mince pies. Do you like mince pies?
No, I can't.
No, good. I don't know anyone who does.
Yeah.
Why do we do it? Anyway, we're going to finish here talking about nickel. It's a strange old year again. Have you got it right this year on price?
Well, my final call. So beginning of the year, I said we're going to get to 20. I thought we'd be there by year end, and we got there in April. And then we slid off, and I thought we would get back to 20 by year end. But as I call out analysts for not admitting they're wrong, I am wrong. It's definitely not going to happen. We've actually broken through 15,500 had been kind of the floor we bounced off. We've actually broken down a little bit below that, down to the $15,000 ton level. The primary reason is in the last, since Trump's been elected, there's actually been a bit of cautiousness in Asia in terms of deploying capital. People are destocking a little bit, would like to have a little more cash on hand just because they're nervous around, what are the Trump tariffs impact going to be on Chinese growth, which is already a little shaky. So I think you will see things kind of stay a little bit quiet through December and January until people get a clear idea post-inauguration, what's going to happen on that front.
Right. Okay, so Mr. Trump causing ripples even before he's got into the seat of power over there, it seems.
Now, that being said, I still think we're going to get to 20,000 by end of February.
Okay.
For the reasons that we've talked about.
It's going to happen.
It's going to happen. This time I will be right.
This time will be right. Well, okay, slight delay in being right. Right, and the drivers obviously around that is, I think, Indonesia finding its footing. We talked about this in the past, where it needs to, I guess, own the space. It wants to own the space, be ONEC, the OPEC of nickel, but it also needs to make sure that the companies in Indonesia can make money. So they will be leveling up, presumably.
No, for sure. So the two big drivers of why this price spike's going to happen. One is, Indonesia has been limiting supply. And there was a story this week where they were actually talking about slashing it, from 225 million tons of ore down to 150 million tons. There's no way they're going to do that. But even if they just keep it flat, that's going to significantly constrain supply going forward. I mean, they, by the end of this year, they're close to 2/3 of global supply. And then the other driver and why early this year is it's the Philippines rainy season. And so their production falls by half. And so because so much ore got sucked out of the Philippines to Indonesia during the year, it's meant stockpiles that around the world, have been drawn down to some extent. So, if you look at the last few years, we saw a spike into April. That's when we hit $21,000. The years prior to that is when we had the big LME squeeze higher. So this might be a new sort of feature of the market each year as the Philippines mine supply causes things to temporarily tighten up.
Okay, and let's look forward a little bit. I just spoke with Chris Showalter over at LifeZone moments ago, and he said at HC Freight, he said, you wouldn't necessarily want to be selling nickel now, but you definitely want to be building for it.
Yeah.
Do you agree?
100%. No, I mean, Indonesia is now the OPEC of nickel. It is one of their biggest exports, and depending on the nickel prices, is the biggest export. And it made them go from a trade deficit and current account deficit to trade surplus and current account surplus. It's very much in Indonesia's interest to see nickel prices closer to 20 than to 15, and also drive up the ore price within the country, which benefits Indonesian miners disproportionately as opposed to Chinese processing companies. So those incentives are all in place. Indonesia has been pretty resolute multiple times. This is the final phase of the fight between China and Indonesia in terms of who's really controlling the market, and my bet is on Indonesia is going to win that one. So
okay, and let's just say, supply demand. Just briefly for people perhaps need leaning into this thing. Right, I think you can say what you want about the demand side coming down the line for whatever reasons, global expansion, etc. But the So that's on the demand side. On the supply side, though, is there any data to suggest that we're going to be swamped and overloaded with nickel coming forward, X the kind of Indonesia narrative?
No, I mean that's the piece now is the INSG put out their numbers for October last week, and we're seeing global mine supply shrink for the fifth consecutive month. Now we've seen demand also come off, so we're still running a surplus right now. But again, everyone's forecast, analyst wise, sees global supply growing. However, if Indonesia is not really going to increase supply next year, which I think is highly likely, and you're now going to see the full year impact of a bunch of closures that were announced, early last year and didn't take effect in some cases till June, July, August, and so forth. It'll be very tough to see meaningful supply growth next year unless prices spike and Indonesia says, okay, prices are getting too high, and I'll start to loosen up supply at that point in time. So, that's and we'll talk more early in the new year in terms of forecast for 2025, but that's kind of how I see things unfolding in the next little year.
Okay, so if I look at the kind of the average, the amateur investor looking at the nickel space, they might sort of judge it on EV sales. I know you said you've done your numbers on stainless steel. Is it still 90% of the market? You need to let me know, but are EV
70%
sales
of the market? Yeah,
70%, right? Okay. So
yeah.
It's chunky. It's chunky.
Yeah.
It really matters to be in the steel side of the business if you're into nickel. But EV sales, I mean, what are they doing at the moment? Lots of chat about slowing down and changing of strategies by OEMs. How's it going to affect you?
Yeah, so I mean, the key thing there is, again, it's not as bad as the headlines would have suggested early in the year. So, global overall is 25%. That's been driven by China, up 40%. But U.S. North America is up 10%. Rest of the world's up 25%. Europe, again, because of the year-over-year base effects, is down 3%. But by and large, things are still growing at a pretty healthy clip. Now, a bunch more of those are plug-in hybrids as opposed to battery electric, but both of those are still growing at steady clips. And, I think one of the forecasting agencies was actually pointing towards Europe as the region that even will have higher growth next year than China, which will, again, read through in terms of pretty chunky demand growth finally for the NCM batteries, which has a lot of nickel in them. So.
Yeah, it does. Okay, and I'm going to wrap this up with a kind of quickie. Like so, there's mince pies to be thrown in the bin. And Canada, got a bit of, you were in the news. We talked about it earlier in the week with this fantastic First Nations investment. Tell us more.
Yeah, so it's been, unfortunately, it was 4 weeks since our last call. So we had a slew of news releases. So we had that First Nations funding announcement where they're taking $20 million of their own capital and investing in the company, which is great. We successfully completed the second permitting milestone with the filing and acceptance of the environmental impact statement. So we are now in a 365-day window to get permits for Crawford, which is great. And then our regional exploration program, again, another set of excellent results. New discovery at Man South, and our Man West project is really shaping up to be, another major deposit, that we think has got the, scale potential of Crawford going forward. So, very, very good news on that front.
Very, very good news on that one. Like, and someone said to me, they haven't said it for a while. They haven't said it for a while, but we're saying, well, it's how do you get something like that? And it's a couple of $1 billion. It's never going to get financed. I think you've shown across the year that's exactly what's going to happen.
Yeah,
exactly what's going to happen.
Yep. So far, so good, and I think 2025 will be off to a good start for sure. So,
okay, is that your poker face?
There you go.
Nice poker face. Okay. Say nothing. Power Nickel. I saw Terry yesterday. Seems super excited. Obviously, this year's been a fantastic year for them, up 4 times. He thinks there's more to come next year. What are you seeing with the latest set of results?
Yeah, some more drill results. So again, it's they're still called Power Nickel, but this was basically it's a copper PGM discovery with a little bit of nickel in it. But again, very exciting. Some pretty spectacular copper grades. They're continuing to extend the one shoot that they found, at depth, and trying to extend the width of it, and still getting decent results. What'll be, again, with this, we just have to see sort of how big that one shoot is, and then whether this, along the structure they have, whether there's the potential for multiple ones of these. So it's great to see a good real greenfield discovery. We don't see too many of these, so very excited for Terry and Power Nickel on that front for sure.
Yeah, it's interesting to see what happens next year. Certainly, there seems to be sort of a rock star investors in that with great expectations. Asian battery metals in Mongolia.
Yeah, so this is a pretty interesting. We've talked about these guys a few times, and they had some more drill results. Again, just under 4 meters of 3% plus nickel and 3% plus copper is great, and that's within a wider interval, 11 meters, and it's relatively shallow at 44 meters. So kudos to those guys for making this discovery. And again, we'll see sort of how big the structures will ultimately be. But as I said, getting a high grade interval is tough. And then once you get to that, then it's finding enough high grade in one area to get a sizable resource. So looking forward to seeing how that unfolds through 2025.
Yep, we had them on recently. Interesting story out there. Interesting to see how they're getting on. And I think Mongolia seems to be opening up on all fronts. Gold projects, lithium, well.
Yep, for sure.
Yeah, when the market returns. And Magna Mining, against Jason recently, a buddy of yours, also doing well, moving things along nicely.
Yeah, doing really well. Earlier this fall, they picked up a bunch of the old FNX, and Jason worked at FNX back in the day. So a handful of mines owned by KGHM, past producing mines that they've acquired. And then just this past week, there's another asset, Broken Hammer. It's a little bit outside the basin, but is in they did some high grade, I think, PGM stuff there. A few 100,000 tons was mined at one point in the last 10 years. And again, some exploration potential. So, they really, Magna's doing a really good job of consolidating, the properties in and around the Sudbury Basin. So again, one to watch next year in terms of, how they look to reopen the various mines.
Well, there we go. I think we're done for the year, don't you?
There we go. Merry Christmas.
Well done. I think it's been an excellent year of nickel reporting. Some good companies out there doing good things. My big takeaway from this year is the companies that have been able to try and take control of how they finance companies like yourselves. I think there's a smattering of others as well. I think they are to be applauded, and hopefully we can sort of see what they do with their capital. The rest, slightly cash constrained, possibly resigned or have given up trying, it seems, because the market is broke, is what I'm told. The market is broke.
Yes.
So what do we do?
Just keep our head down, focus on the good names, and the value will ultimately get surfaced one way or the other.
There we go, folks. Okay, Mark, appreciate your time. Bye.
Yep, bye-bye.